And welcome into Market Talk. Happy Monday, December 6th. Thanks for joining us, making us part of your day once again. MarketTalkAg.com is our home on the web where you can find us. MarketTalkAg.com is, again, our website where you can find all of our streaming sources, social media links, news of agriculture, and much more. It's all online, MarketTalkAg.com. Thanks for joining us here as we kick off a new week. We have a WASDE report due out later this week. Typically, that December report, pretty uneventful, but it's something nonetheless that we have to keep our eye on. Markets may be reacting a little bit to that, maybe squaring a little bit ahead of it here this week as we had a mixed day, we'll call it, on grains and livestock. Let's talk about all of it. Let's bring in our good friend John Heinberg with Total Farm Marketing on the show for this Monday. John, good afternoon to you. And as I just kind of mentioned, just felt like a quiet day. We did finish off the lows in grains, which was a good sign here to wrap things up, but we got that WASDE report Thursday, and to me it felt like maybe just some squaring ahead of that starting. What do you think?
Yeah, a lot of little different variables coming into play. And obviously, we do have a report this week on Thursday. Usually, the December report's not a whole lot to write home about, just some maybe minor adjustments on the demand tables is what we could see. Expectations maybe corn gets a little tighter, beans get a little heavier, but very minor adjustments, is at least what we're thinking here for Thursday. But again, it was a good day today from the markets climbing off their lows. Corn actually finding a way to get back into positive territory right towards the end of the day, and beans well off those lows. Maybe we got to go look at those outside markets. Strong day in equity markets. Dow futures currently trading about 700 points higher. Crude oil pushing to $3 higher. That probably is what helped out beans as it stepped up that soybean oil market, which kind of trades like an energy market at times, and help boost those beans. Then we saw a little bit of flow come back into the wheat market at the end of the day, getting them back to positive territory after testing some support lows this morning. And obviously the wheat market's been a pretty big driver in that corn market lately too. So it was probably a little bit more of just overflow action from one or the other outside markets that helped give us a little bit on a very, very quiet day overall in terms of news here in the grains.
Yeah, you mentioned it. That just not a lot of news out there. Coming off of a weekend, we wondered what we would see, and I think with the new variant of COVID-19, the Omicron the worries are lessening a little bit. I know that helped out the stock market today, and crude oil up nicely as well today. So all in all, with all of that on the side, it felt like a pretty solid day here in grains today. I would say probably the most weakness that it felt to me was in that soybean complex, John.
We still got a lot of concerns there on the demand front. We saw export inspections today, still a very solid number historically, 2.25 million metric tons or about 82 million bushels got shipped out last week. That puts us in the top couple of years here in terms of historical time frame, but we're still trading about 20% or 29% under last year's level. So that's still something in concern. We're still watching the South American weather. That Brazil crop is still in good shape. It's going to probably get here early. The key on these export inspections is going to be how long the tail is. We lost 30 days at the start of this process because of Hurricane Ida. We're still trying to recover from that. Last year, we had a late crop coming out of South America. It allowed us to export even further into January, into February than we typically do. This year, that might not be here. So that still has an overhang on this soybean market in general. So we got to keep an eye on that. Plus, also still what's going on with Argentina. We did pick up maybe some showers. There's still some talk that things could be, in good shape for their first initial crop ratings down there, and that may have weighed on that soybean meal market a little bit today. So beans still got some headwinds here, and it's all going to be focused on that South American weather, which truly may be more of a January story than December. So we'll have to kind of see how things trade out as we go into the end of the year.
What are your thoughts weekly export wise on corn and wheat here today, John?
Well, solid numbers again on corn. I mean, really overall still neutral, but this is not the window we're shipping that corn out. That kind of kicks in when the bean shipments kind of die down and South America takes over there and we get into that March, April, May, June window. But we got a really good base of sales on the books. We're still seeing some activity that's building those sales. There's still some global concerns regarding corn in terms of supplies, and that keeps this market supported. I mean, that was a pretty good close today when you think about the price action of where we started today. I've got my targets looking a little bit higher right now. Obviously, probably getting marched through the $6 barrier as long as we don't have any news that puts some curve into this thing. Maybe it happens after the first of the year, but it still feels like there's good demand out there, good cash market out there. We're still trying to figure out the supply side of the equation overall in the United States as well as globally. It just feels like the money wants to push this core market a little bit higher, obviously, as we move into the first part of 2022.
Yeah, I think overall, as we've alluded to, quiet day today, a few good notes, a few iffy notes in the trade, but overall, this feels like a week here heading into this WASDE report. Like you mentioned at the top, not really usually an eventful report, and outside of maybe a quick reaction to whatever we see on Thursday, it feels like this could be fairly quiet week and maybe the start to our Christmas trade, so to speak, where things just kind of die down and we just kind of trade and drift a little bit one way or another with the fact that there's usually not a lot of news out there.
Yeah, that's very true. And the biggest thing we'll have to really kind of keep an eye on too, do we see some profit taking at the end of the year? You still got funds sitting on a lot of long corn contracts. It did shave off a bunch last week with the Omicron virus or variant coming into play in the news headlines. We actually saw a big liquidation across the grain markets in general because of that. So there's a little room for maybe some money to move back in. Again, we'll probably see it sit tight till the end of the year, and then they'll make a decision. Where does this market want to go as we move into 2022? So that'd be about my only concern. If we don't get any numbers that are just off the wall on the report this week, that maybe some money just moves to the sidelines to tighten up the balance sheets going into next year. So that could be something that gives us a little bit of downward pressure. But typically we see corn, kind of get through this report and over the historical side of it, climb a little bit higher as we move into January, February, and then early March.
Talk to me a little bit about on the grain side here before we switch to livestock, looking out towards later 22 contracts, maybe even some 23 contracts. I know on the corn side and on the bean side, we do have some good price levels out there on the board. I mean, are you talking to guys and gals about maybe making some sales out into 22 and maybe even into 23 right now as we near the end of the year, John?
It's something that's definitely on the radar for 22, 550 on the board. Seems to kind of have us tagged right now. Obviously, if corn pushes out, the thought of us getting to a $6 window is probably still well within reach here, especially if we continue to see some of the higher input costs and concerns on the acre side come into play. If we do get a little bit of a ramp up in demand as we move into the spring, there is still some weather issues in that southern Brazil region, and that's that first crop corn down in those areas. That's kind of their key export corn in that regard. So you need to kind of keep an eye on what happens there. So that could still come into play and be supportive of this market overall. But it's a window you need to start thinking about this. If you got basis levels that keep you in at least a $5 cash sale, that's a heck of a place to get the toe in the water. I'm going to start looking at some put strategies here very, very soon and start getting at least building some floor. At least that way, if we have the Black Swan event, we got something put together. Same thing on the soybean side. We still got to keep that Brazil crop in our radar. Typically, we see some pretty strong push. You're not going to bring 140 to 150 million metric tons of beans onto the market. At least that's what we're anticipating here now in that March, April, May window without seeing some price pressure coming into play. So we're getting to a spot here, probably between now and the 1st of February. I want to make sure we got something to at least protect this crop through that South American harvest, whether it's using short date options or go ahead and building strategies all the way out to November.
John, let's talk livestock. Hogs today, let's start there. Pretty rough day throughout the hog complex on the board. Triple digit losses throughout that February contract. The worst of it down 327 today, 78.22. I know pork cutouts took a hit on Friday. Coming in here this week, was it a reaction to that? Do you think? What are your thoughts with what happened in hogs today?
It's probably a big part of it. That hog market's been getting traded very technically a lot here in the last few weeks. First off, we're still waiting for some cash market move. Now, we did see some firmness up at the end of the week last week. Had me a little bit optimistic that maybe we get some follow through trade. Then we got retail values closing $6 plus lower on Friday. So that probably brought some spillover selling into the market this morning. We gapped it to the downside technically, and then stops kicked in. No, that's even with a midday rise of those same retail values up another $7.90. So we're net $1.22 in the last two closes, the last two trade windows on the positive side. So we'll have to see. To me, you look at this hog market, it's actually trying to build itself a big wedge pattern. If you go all the way back to the summer months, We're keep pinging higher and lower. Now we're working back to the bottom of the range, continue to tighten up the coil. And I think we'll see what happens when January gets here. We start looking into 2022, where we are on the demand side, where we are on hog number side. We'll have to keep an eye on what happens on the disease front again this year. We had PRRS issues that really got into the hog herd here the last couple of winters. So those will be some things that are out there. I mean, overall, the supply is still tight. It's still going to come down to the demand. It's still going to come down to what we see in terms of that export trade and that product movement.
John, how about over in cattle today? I know we had decent strength in cattle. We've continued to see cash move higher the last couple of weeks, and just felt like cattle maybe found a little bit of a range today and just kind of hung out there. Feeder cattle fared a little better than the live cattle trade, but I wonder going on in cattle, is it all just cash market support as that's trading above the board, or what are we seeing here that's really driving this cattle market, and can we continue?
Well, that was the biggest factor coming into the recovery at the end of the week last week. We got that 142 cash trade out there. We're expecting that trade to stay steady to firmer again this week. Obviously, nothing developed here on a Monday. I'm still kind of watching the seasonal window. We typically are, if you're on the shorter side of February cattle from now till about the 10th of December, you're usually in a pretty good spot. But then around that 10th of December window, things turn back north on the seasonal side. In fact, some of our seasonal charts show if you're owning April cattle from then on into the end of the year, that's a successful trade. And you look at those charts like that. Apologize. Like that. So anyway, that's a window we may be looking at here right now as the possibility this market may have one more push down. If we don't get cash trade we need to, we don't see that retail demand where we need to, and this market's got a chance to possibly work higher into 2022, which is what we see seasonally. The numbers are there. They're friendly at this time frame in terms of cattle. Look at cow slaughter continues to be strong. I think these cattle numbers are going to stay tight as we move well into 2022. It still keeps me friendly to that market overall. We may have some choppiness here in the front end just so we kind of get those numbers all organized.
And I wonder as well, on the feeder cattle side if we can if we keep trading this range in corn, this 550, 560 range that we've kind of been in, 570, that seems to be feeder cattle pushing higher on that, regardless of the day necessarily. If it's just a quiet day like today in corn, feeder cattle kind of eat it up and move higher. I mean, 167, 8, 170 feeder cattle on the board. That's a pretty impressive number, John.
It is. There's some great value out there. It's merited, maybe possibly with those cattle numbers being where they are at this time frame. Especially when we look way out into those longer term views. Now, I'm going to start having those conversations now with cattle producers, that are in the feeder cattle market. Boy, we can put some floors under that historically are very good and just leave that top side wide open if we continue to have a run in that cattle market. So again, that's kind of tied to those cow calf numbers and what we're seeing in terms of cow slaughter, as well as the demand that's in that feeder cattle market. So to me, still think it's a good market. We just got a little bit of time. Maybe we got to work through here. But for a producer out there, when you're starting to poke at that 180 level into next fall, that's starting to be some real good value that we need to start putting a floor underneath.
John, how about the dairy market? Catch us up on the latest you are seeing there as we start this week.
Another real good start to the week this week. Strong gains again across the board. Actually pushing that January contract to near-term highs today, up another 40 some cents. We continue to see really good strength in the export market as well as those products in terms of what's happening there. And it's not just cheese, it's the whey powder, it's a non-fat dry milk. Those are those exportable goods that there's high demand for. And when those product prices are trading at levels, the milk market's definitely going to follow with. I know I keep saying this, there's a lot of great value. I'm looking at $19 plus across the board for producers. Typically, that's extremely strong for this time of year, for that time window. So the heck of an opportunity to use some of those pricing tools to build that floor and lock in and make yourself feel a little bit at least comfortable on the price side of things going into 2022, but still find a way to keep that flexibility in the market. That's going to be the key. I think in a lot of these markets is going to be the word flexibility. So you got upside in front of you while you still manage that downside risk.
Well, great advice, John. Any other final thoughts you have for us real quick?
Again, continue to watch the headlines. I'm always cautious at the end of the year. We've had some just major corrections at time to time, just because of the pullbacks and profit taking that come into play. When you get thinly traded markets like this, things will move very, very quickly, whether it's in the equities market, the energies market, or even in the ags. So that's just something to make sure you're just kind of managing your risk when it comes to the cash market. Take a look at things again, keep those sales opportunities in front of you, stay disciplined at targets, and then use the option strategies or future strategies to keep yourself open to the upside if those things need to be there. Again, flexibility is still going to be the key. There's a lot of good value there. There's also means there's a lot of risk.
John, if producers need a little advice, need some help managing that risk, I know they can reach you and the team at Total Farm Marketing very easily. How can they do that?
Sure, love chat with them anytime. Feel free to give me a call, 800-334-9779. Shoot me an email, johnh@totalfarmmarketing.com. Or again, don't forget that website, totalfarmmarketing.com. Again, we got some webinars coming up, one here with the report this week. Feel free to take advantage of those. Those, again, free to the producers. A lot of great information out there for you.
John, we appreciate the time as always. Thanks for joining us on this Monday. Have a great rest of your week, and we'll talk to you next Monday.
Sounds great. Have a great week, everybody.
John Heinberg with Total Farm Marketing joining us today on Market Talk. That's going to do it for the Monday, December 6th edition of the show. Find us, markettalkag.com. I'm Jesse Allen. Have a great afternoon.